Recording started a little late. I thought I hit record and I didn't, but June 30th, end of the month. It'll be interesting to see how the market settles with it being the end of the month, but also a Tuesday. Um, yeah, we're 17 minutes into market open. Marked all my key levels. We have I'm gonna run through them quick. We have a 4-hour intermediate high right here, 4-hour bearish fair value gap right there. We have a 1-day intermediate high right here that we're about to touch. We also have a 30-minute bullish order block right here that has a 15-minute bullish inverse fair value gap within it. Now, what I am seeing right now is we have not taken out this high. In fact, we've made equal highs at this level right here. I was looking for an S&T divergence where ES has taken out the highs, but NQ hasn't. And if this is what I see, where NQ has made those equal highs and then price comes all the way down here, I would consider that an SMT. Because the bottom line is, which one has taken out a high, which one hasn't? That alone is an SMT divergence. Now, are we pulling back for a retracement to enter a key level to then continue in the dominant trend direction, which could be bullish? Or is the SMT, kind of changing the market picture and we're long-term bearish? Okay, and I'm saying in this very specific context where we have, SMTs at the buy side. Yeah, because ES is up here, right? ES has already taken out these highs from Thursday, 9-10 a.m. So that's what I see potentially happening. Or with equal highs right now, maybe NQ could come down here and then take out the equal highs, which would just generate even more liquidity, right? Taking out one high resting below a 1-hour bearish fair value gap is not as powerful as taking out two highs resting below a 1-hour bearish fair value gap, right? This generates more liquidity. So I could see that happening, but if we did sweep that high, then it's not really a bearish SMT divergence because then both pairs have taken out the high from Thursday, 10 a.m. So that's a bit of a dilemma we're facing right now. And that also kind of leads me to believe that, hey, maybe we're bullish and I just have to wait for us to enter, our 30-minute order block. But then the order block's pretty low down here too. So I don't know if entering this 30-minute bullish order block and 15-minute bullish inverse fair value gap is going to generate enough liquidity for us to then take out these highs. It could, right? Especially if we make equal highs and NQ does not take this out. So those are kind of our, those are the two scenarios, and we're just gonna have to adapt based on what we see. I'll quickly pull up ES just so you can see what it looks like. I have it on another screen, but yeah, this is the SMT I'm talking about. This is the Thursday 10 a.m. highs. And on the 4-hour, ES has not targeted this 4-hour bearish fair value gap, which I would, ideally like to see if there's an S&T. Not only is there an SMT, but that SMT on ES on one of the pairs has entered a high time frame bearish confluence, which further substantiates, downside price action. We don't have that yet. I still have it on another screen. In case it does, I will, bring it back into the picture. But for now, no, we've been juggling around this area for a while. So we're gonna wait till then, and until it enters one of my levels that I've marked, we're gonna pause. Oh, we just entered one. All right. Even with that, I'll pause and I'll resume once I see how price reacts at that level. Okay. After kind of looking at the higher time frame more, both ES and NQ have entered the intermediate high, okay, within the bearish fair value gap. Now, this is something I completely missed. It's not even an intermediate high. It can't be. Get rid of that. Why? Because we had this 1-day bearish fair value gap that we already tested with this candle right here on Thursday, and we took out the lows. The fair value gap was successful. It carried out. It already carried out. So now, especially, this makes more sense why, an SMT wouldn't even matter. Now, when you look at the 4-hour and you see us kind of invert this bearish fair value gap right here, We have a massive order block here, continuation candles right here, and this 4-hour ends in less than 5 minutes. It's going to be high volume 4-hour candle with probably little to no wick, right? So we're looking for longs. That's what I'm saying. We're looking for longs. Ideally, maybe targeting this intermediate high up here. I think we could very well fill all of this liquidity because, yeah, I understand that there's a 4-hour bearish fair value gap right there. I get that. And it doesn't matter because it's all within the 1 day. And right now we're clearing all the liquidity in the 1 day. So what's within it, the 4-hour doesn't matter as much. Also, the same way an SMT divergence could make price temporarily pull back so that you can enter a trade that's continuing in the dominant direction, it doesn't only apply for SMTs. That applies for high time frame order blocks, bearish fair value gaps, any mitigation blocks, any breaker blocks. Applies for all of that, right? Even applies for just taking out a key liquidity level like a major high, major low. But on ES, I'm gonna pull up ES really quick. So you see how this is NQ's 4-hour bearish fair value gap. Now look where ES is in relation to their 4-hour bearish fair value gap. We're already within it. 4-hour time frames ending in 3 minutes. ES has entered the bearish fair value gap. Now that bearish fair value gap is going to be used to temporarily pull price back and then continue in the dominant trend direction. That's what's going to happen. Okay? And we can be more confident in our longs because we see something like that. Most people would think the opposite, that no, man, I don't know if we could take longs because ES is within a high time frame bearish fair value gap. No, but look big picture. If on the 1 day everything is telling you bullish and just the candlesticks itself are telling you bullish, then who cares if one of the pairs are within a 4-hour bearish fair value gap? It doesn't matter. That fair value gap will in fact be used for a retracement for price to enter a discount zone and then continue in the dominant trend direction, which in this case is bullish. So point is, on the 15-minute, on the middle time frames, I think, 15-minute, 5-minute, I'm looking for NQ to retrace, enter that key level, and then continue bullish. That's where we will enter our longs. And now, what I will do before that is mark the breaker block that we just took out. I'll mark that breaker block. And from here we'll wait. And price should retrace back down here, especially with this being a 5-minute intermediate. 5-minute intermediate low, right? We have a 5-minute bearish fair value gap right here. Candle 1, candle 2, candle 3, and an intermediate low. We have a wick enter that bearish fair value gap, but barely, right? It did not fill all of this inefficiency. That's another telling sign that we just barely entered that bullish fair value gap. That is now considered an intermediate low, which is resting within this breaker block. So honestly, I am looking to potentially do like a limit buy right here. Okay, now this is where we'll kind of determine our stop loss and how much we want to risk. Let's assume our stop loss is right here, the beginning of this uptrend, and this is where we end up entering price, right? That is 135 points. Now what's 135 times 2? 270. Now what's 500 divided by 270? Just under 2 micros, just barely under 2 micros. When it's that close, I'll just round up. I'll do 2 micros. If it was a good bit under 2 micros, if it was maybe halfway there or like 1.5 or closer to 1, then I would just trade 1 micro, right? But the fact that it's just under 2 micros, I'll trade 2 micros, especially if we enter the trade somewhere around here. That'll be fine. But It depends. Like if my confirmation is up here, then I'm only entering 1 micro. So I'll feel it out. If I enter the trade here, I'll do 2 micros. If I enter the trade up here, I'll do 1 micro. That way I can manage my risk the best, and I'll still be within my personal max risk per trade, which is $500 if price enters down here, right? If price retraces all the way down here, I don't want to be at negative 700, right? I want the cutoff to be negative 500. And the way we determine that is by, finding out, the point differential and how much that would cost us if we entered a trade at this level versus this level. So you kind of have to do that math before you enter the trade. And that is what will preserve your capital in the long run, managing risk even on the short trades. So 4 hour just finished. Price is pulling back down. I have NQ on the ES on the 1 minute now. That'll just kind of help me visualize this whole thing. And now I'm also thinking, like, what if we have a 5-minute bullish fair value gap right here, which according to the Fibonacci tool is a golden zone. So now what I'm going to do, ready, is look for a 30-second inverse fair value gap. Because we see a 5-minute entry, I need to look for a 1 minute, like a 2 minute, 1 minute, or a 30-second bearish fair value gap get inversed, and that is my confirmation. So right now I'm looking for the 1 minute. If we inverse that, if we have a candle body close above the candle body of this second candle right here, this 10 a.m. 1 minute candle, that is my confirmation to enter longs. And in that case, my stop loss would probably be over here instead of down here. So I'm going to do 2 micros regardless. We're not going to trade 3. Let's do 2. And it'll juggle around there, and I'll resume in a sec. Okay. Candle body is about to finish. Even though it looks like we're going to take out that high perfectly, I need to wait for the candle body to finish. I just need to. Because if we don't, if in these 10 seconds left, the body ends all the way down here, hypothetically, right? I can't take the risk of that. I need to wait for the body to finish above. And it looks like it is now.
Order filled.
So now we're going to enter our long. I don't have to wait for a pullback. It doesn't even matter. Don't do that. The second you see the candle body close and it's confirming your trade, just enter. Don't wait for a slight pullback, because then you're going to be hoping for a deeper one and a deeper one. And then it's going to start moving higher and higher, closer to the entry point that you could have entered at the candle body close of the prior candle. And then you're going to be like, oh man, I missed out. But you didn't. Just enter when it gives you the confirmation. Don't juggle around when to enter if it already confirmed to you that your strategy is carrying out now, right? You're talking about like a $50 additional risk by waiting for a pullback, which could cost you the entire trade. That is not worth it. So we're going to keep that. Let's see where my 500 stop is. There, and my TP. Right there. I should just do the Fibonacci, the golden zone right here. But a 1-to-1 risk would be the smart thing to do, especially since like I don't want to take a trade or like have my trade confirmed based off a Fibonacci TP level. That's the thing that I haven't included in my strategy. Okay. Like honestly, for me to obey my strategy more, my TP should be up here. Okay, but I'll keep it right here for a 1-to-1. If it's not going to be up here, which is, what is that? That's almost like a 1-to-3, a 3-to-1, just under a 3-to-1, 2.5-to-1 risk to reward. I'm cool with a 1-to-1. I'm perfectly okay with a 1-to-1. We can do that right there. Now we're cool. Now we just leave it at that, and we let the market do what it has to do. All right. All right. I had 15 minutes till I like to exit all my positions, that being 11:30, and price came to my break-even point, so I sold. Um, Sold for break. This could be a potential head and shoulders pattern, so I didn't really want to play around with that, especially since we are in a 1-day bearish. I mean, 11:30 onwards, 12 p.m. starts getting a little choppy. The likelihood of us hitting this TP target right here, it's pretty unlikely if I want to exit before 11:30. So sold for break even. I guess the takeaway here is, our strategy was valid. Close to hitting our stop loss around 10:55, but ended up coming back up to break. When you see something like that happen, when you see that you're like 75% of the way through your stop loss, there's 15 minutes left till you want to exit all your positions, and price returns to break even, my advice is sell for break even. Okay, preserving capital is more important than the risk of making money where you could lose your entire risk allocated and then it takes you 2 days to make that back and profit. Whereas you could just preserve capital here. So that's the trading day.